Diana, stay right there. The Census Bureau is reporting that homeownership, meanwhile, in the first quarter of 2015 dropped to nearly 64%, and that's the lowest in 25 years. So what's happened to this American dream? For more, Shari Olefson joins us. She's a real estate attorney and founder and director of the Carnegie Group, a Florida-based think tank. Shari, welcome to you. And let me just start with the point Diana was making about these new financing options. Didn't there used to be a prepayment for paying down your mortgage early? Why is it now that all these lenders seem to want you to do that?
Well, yeah, we used to have some loans with prepayment penalties because that, of course, is a risk for the lender. But in these cases, with these sort of higher, theoretically higher risky loans, they want to churn the loan money. So they're looking to reimburse that quicker. You know, the thing is, though, Kelly, that these types of loans are not available for average Americans. They tend to be available, again, for folks who oftentimes don't even really need the money. Very few people actually have $50,000 around to pay down a home equity loan. So in terms of these as examples, they're not maybe the best examples of the overall credit box opening after the qualified mortgage rules started. We're better off looking at maybe some of the changes at FHA or at Fannie and Freddie. And
right.
Sure, they're opening the credit box, but it's an entirely new box. In fact, before we didn't even have a box. And now we have what you would call a box with the qualified mortgage rules.
Robert, does that mean that the chasm between the affordability for the higher end of the market and the lower end is growing?
Yes.
Absolutely.
And partly for these reasons, but also just because, you know, we've looked at the real estate recovery for the past 5 years has been one for the wealthy. They're either paying for cash or they're the ones that are able to qualify, get these very low rates, invest in property because asset prices have gone up. They're getting both the asset gain and the very low borrowing costs, sometimes even not even putting that money toward the property, but investing in the stock market.
Right.
So absolutely, those who have been able to borrow.
Sharon?
Well, but wait, guys, I have to disagree. I have to disagree
Diana?
on just one point there, though, because you're saying that it's been a recovery only for the higher end. And yes, they have the cash. And yes, I'll admit, a lot of these loan options that I just mentioned are for the higher net worth borrowers. But you've seen Fannie Mae and Freddie Mac come out with these 3% down mortgages. You've seen a lowering of the premiums at FHA. And actually, through Freddie Mac, you can have the entire down payment gifted. So you're really putting nothing down if you get a gift from somebody else, like, say, your parents, to buy this. The trouble is not the loan product. The trouble is today's first-time home buyers who don't have the money or the incentive to buy a home. It's not that the products don't exist.
Sharon?
And for some,
Well,
we're looking
we're really
at
at
U.S.
the
home
beginning.
buyer rates.
Hang on one second, Sharon.
Shari, if we're looking at U.S. home buyer rates that are at the lowest level in 25 years, it will be interesting to see what foreign home buyer rates here in the U.S. are looking like, because at least in some of the big metropolitan areas, one of the other issues is that people are coming in from other countries doing all cash deals, and that's where we're seeing the buyer's momentum. We're not necessarily seeing that with the average homeowner.
And last question, Shari, do you expect the homeownership rate to rebound if financing loosens up?
Well, you know, one of the problems is a permanent problem unless we figure out a way to fix it, which is jobs and wages. The jobs that are typically associated with low home ownership rates are the jobs that are growing in this country. And the jobs that are typically associated with higher ownership rates are shrinking. And we also know that wages are not nearly keeping up, not only with home appreciation prices, but even with rental rates. So until we can fix that problem, we're not going to be seeing huge growth, even though millennials do seem to be stepping back into that first-time buyer seat.
Great points. Thank you both, Shari Olefson and our Diana Olick.